Hey guys, it's Derek. Wanted to talk about my experience with Fundwise, fundwisecapital.com. This is one of those business lending sites, and I was referred to them back in late last year, 2019. I have an e-commerce business and was looking to ramp up my inventory, and so I was basically referred to them through a course that I was in a group, and so I just wanted to go through my experience with Fundwise Capital. Overall, it was a good experience. I actually received about $70,000 in unsecured credit lines, which is basically a mix of it was basically a mix of credit cards and then line of credit as well. I'll talk about a little bit about those two, the differences between those two things, and my more of my experience. But basically, the process is really simple. So if you're in real estate and say you flip houses, this might be a good option for interest-free credit, 0% APR, to help you kind of bridge the gap when you acquire property and then want to maybe use it as like a bridge loan or uh, uh, like a short-term financing option. Basically, what they're going to do is they're going to go out there and they consider it like a marketplace. They're going to basically use their internal expertise and their relationships to take your information and go to lenders with your information and then let them sort of compete for your business and see how good, basically find the best financing options that you can possibly get for your business. So it is a done for you white glove service that they offer. There are requirements. I mentioned this is good for real estate. Let's say maybe you're a restaurant owner and you're just starting. You've been in business for a couple of years and things are going well. You want to ramp up, or let's say maybe you own a service business or a business that requires inventory. Maybe the reason I chose to use them was because I needed more inventory to continue growing my business, and it was basically I was at the point where in order to continue growing quickly, I needed to have some kind of short-term financing available so that I could fund that inventory. I will say, if you're just looking at starting a business, I would not. I wouldn't make the step yet. I would wait until you're already profitable and just looking to grow quickly. At that point, then you can start to do some research on these funding options. Because it is short-term financing. It is a mix of credit cards and direct lenders and credit lines. So even though they are interest-free, they're only interest-free during introductory periods. So when you open up an unsecured line credit card, uh, the banks will sometimes offer interest-free for a certain period of time, and so you can do this yourself. You can go out there and apply for credit cards yourself, but you're most likely not going to get the same amount of funding that you could get through using a company that knows what they're doing and does this. It's because if you do it and you do it slowly over time, say you're applying for 7 different credit cards, but it takes you like 3 or 4 weeks to get through all the applications, then each of those companies are going to be asking why you have inquiries, and that's going to definitely affect your ability to get more credit. One of the benefits of using Fundwise was that they applied for all of my credit basically on the same day, so it was in a very short period of time, where I did receive multiple inquiries, but they all occurred in a very short time frame. So basically that allowed me to get through the application process with these banks quickly and not have questions about all of the credit inquiries on my account. So Fundwise, there are requirements. You have to have a 680 credit score. You have to have be in business, I believe, for like maybe 1 or 2 years. And you have to basically prove your income is above a certain level on a monthly basis. So there's income limits, personal credit limits. You can't have like bankruptcies or collections on your reports. Let's see what else. I've got a couple pulled up here. 2+ years positive credit, 680 credit score, no collections. Yeah. So there's personal funding, there's business funding. That's another thing I should talk about. They got me both personal funding and business funding. The personal funding was basically 0% APR credit cards that are on my personal credit report, and then the business funding is separate from that. The business funding doesn't report to your credit monthly. You get the funding, but it's not like it doesn't come up on your actual credit report. So I tend to use the business funding more for my business because I like to separate personal and business. And yeah, so they will go out there and they'll apply for personal and business. You can tell them not to apply for personal and just do business if you like. That way, the companies will still run your personal credit, and you'll still have personal guarantees on the financing, on the business funding, but they won't report to your personal credit, to the credit bureaus on the business cards. So those are the requirements. The application process is really quick and easy. Basically, you just go to their website and you apply, and it just asks you a few different questions, like how much you would like to borrow, and then you give them a little bit of information, and they'll have somebody call you. And I actually worked with Brant, and he reached out and talked about my possible funding options, and ended up getting over 70,000 worth of total credit limit and credit amount, which was very helpful for my e-commerce business because it's so inventory based. So I'm basically able to finance my inventory and then purchase the inventory, sell it, and not pay a single dime in interest, which is extremely helpful if you've got a business where it's more capital intense, and you've got to purchase inventory, and you know that your sales cycle might be like 2 or 3 months. But if you can go out and you can borrow that money at 0% APR, no interest, then you're basically, making a lot more money because you're borrowing the money to get a return on that 0%. You're getting a return on 0% money, which can be very lucrative. But I will say I use this very much in moderation. Normally, I keep a certain amount of cash for that is like a certain ratio with my amount of current outstanding credit loans that I have, and I keep that. I like to maintain that ratio. You'll figure out what works for you, but I would not make the mistake of just going out there and loading up on all of this new credit that you have without having like a guaranteed way to pay it back. You have to be very careful with credit. So that's definitely a disclaimer. don't apply for this if you don't already have an existing business that is profitable and already making money. Only apply for this if you have a uh, basically a guaranteed way that you're going to pay this back in a short amount of time. And if you have that, then it's very beneficial because you can just rinse and repeat and just keep financing and keep paying it off, and you're making a lot more money. So there's a couple. Here's their website. That it's a very short application. You chat with an advisor. They show you basically how much they can get you for funding and your funding source. It took less than 10 days for them to get me funding. I didn't really have to jump through a whole bunch of hoops or up my credit score or anything like that. But it just varies based on your current situation. But you can get up to 250, 500,000 in working capital based on depending on your situation and your revenue and how much you need. But yeah, they consider themselves a loan marketplace. They make lenders compete for you and improve their terms. Yeah, that yes and no. A lot of these big banks that you're going to be opening credit lines with and getting credit cards, they kind of have their terms set in stone. But yeah, startup businesses can apply. You can be an LLC or a corporation. I wouldn't necessarily. I would definitely form an LLC before you apply. Wouldn't do it individually. That's just me. In general, if you have a business making money, I would not operate that as a sole proprietor. Definitely consult a tax and legal or attorney for that, because they'll be able to kind of explain the benefits of all of that. Benefits of acquiring funding: you retain all ownership of the company, so nobody is investing in part of your company and taking ownership and equity, which is super nice for a business, because you keep all the profit, you keep all the control. So it's really nice if you've got an existing business and you don't want to give up any share of your business for the funding. The only major ramification of this downside is if you're irresponsible with this credit and you don't have a way to repay lenders. So if you just take funding and blow it on vacations and fun stuff that doesn't make money, only use this to purchase assets that make you money through a business. That goes without saying, but I just want to reiterate that this is not like free money. This is you're taking money to pay the money back and have a return to you on top of that borrowed money. And so you're definitely going to have to pay this back. Everything is personally guaranteed when you sign up for these things. So just take that into consideration. This isn't free money. This is borrowed money. What are the differences between startup and business funding? You have to have certain revenues, be in business. Business owners sometimes they get better funding, and people, if you're just starting up, it's sometimes that's definitely a negative with the lenders. But if you can prove revenue over time and it's consistent, then that's what they like to see. Minimum requirements: 650 credit score. For business funding, you need to have at least 15,000 in sales per month and over the last 6 months with a minimum of a 600 credit score. So you have to show consistent sales and a certain amount of sales to get the best terms and credit amount. Sometimes you can bring a credit partner on with a 650 plus credit score to help you qualify. They can get you qualified in 10 to 21 days. Again, it took them less than 10 days to get me qualified. So these guys, it's basically they've kind of refined it down to a science where they just turn out applications and and they kind of know what they're doing. They've done probably thousands of these and millions and millions and millions of dollars in funding for business owners. So they just sort of, they're turning through. It takes them a very short amount of time to get it done. And yeah, so let's see what else we have here. What type of funding? You can get all kinds of different funding. That's one of the things they do is they kind of let you know, hey, if you're an Amazon seller, this is probably the best option for you, because that's what they do. They work with real estate, they work with Amazon, they work with e-commerce, they work with small local business, service business, restaurants, retail stores, things like that. So they kind of discuss, can you handle this on your own? Technically you can, but you're probably not going to get a lot of credit and you probably won't get the best terms. So it definitely helps to have somebody in your corner that knows what they're doing. So yeah, we went over the requirements. Yeah, borrowing from friends and family, I wouldn't recommend doing that. It's stressful, and can ruin good relationships, close relationships. Yeah, funding, traditionally going to a bank is like, if you just go to the bank down the street, they're probably going to turn you away. They like to lend against real estate. To be honest, they like having collateral. It takes a long time. Another good thing about this is when you get credit lines and uh, like a line of credit, it's revolving. So they go out and they get you revolving credit, not just like a term loan where you have like a 6-month loan and then you pay it back and it's done. You have to reapply and it's slow. This is like a revolving line of credit. And the credit line that they got me is revolving. So as you use it more, then you get better interest rates, better terms. You show them that you're paying it back. They like to see that. They start to lower the interest rate and expand your credit line over time. I've actually been using the unsecured lines a lot more, but it's definitely going to be, it's a good option to use the line of credit because that's a long-term. The unsecured lines after the 15 months or the introductory APR period, then they go back to the standard period on those credit cards. So you need something more long-term, which is a line of credit where you get those good terms over time for the long term instead of like a typical credit card. So yeah, I mean, there's some other reviews out there. Overall, it was a pretty good experience. I recommend it for anybody who's got an existing business, qualified. You're looking for long-term financing. Somebody kind of guides you through how to do all this, and they basically just take it off your plate and do it for you. They do charge 9% on the unsecured lines, so it's a 9% fee for them to base. It's only based on the amount that they actually get you qualified for and that you accept. And then basically what they did for me was they put their fee on one of the credit lines that I got approved for, and I just paid that off, and that was like their fee. And then they don't take an upfront fee for like a bank line of credit because they get like a referral fee off of that. So they actually get paid by the bank line of credit, the bank that gives the line of credit. So that's kind of nice. When they give you when they check your credit, they don't do a hard inquiry. So what they did for me was I went and purchased my credit report and shared it with them, and that didn't affect my credit score. Let's see, you're going to get inquiries from the actual lenders. So if you're looking at like if your credit score is kind of like on the verge, maybe it's like a 680, and you're looking at purchasing a house anytime soon, or like some big, thing, you might have to explain why you have inquiries. So just keep that in mind. You will get inquiries. That's just kind of part of getting credit. Yeah, I'm trying to think if there's anything else that I haven't covered. But the actual people that I worked with were great. Brant was awesome. They're based out of Utah, and the people I talked to were just generally nice and actually cared about getting the best results, and not just treating me like a like a number that they're just trying to kind of squeeze the most value out of and move on. So uh, yeah, I also worked with, I think it was Ben as well, and he was awesome too. And they're just generally nice people, and just seem to really care and kind of go above and beyond, answering all my questions. I think I talked to them for like an hour, just pounding them with questions, and they didn't miss a beat. They didn't mind answering all my questions, and I was asking them like specific questions based on my specific business, and they knew better than I did, uh, basically what I should be doing to grow my business the quickest and the most. So they're very experienced, and they definitely know what they're talking about, and they do this every single day. So um, yeah, these are some of their fees here. 6 to 18 months, 0% for 12 months. That'll vary based on the actual card, but they. I don't have a lot negative to say about them, other than maybe looking back, I'm not sure, because I don't use the personal lines of credit much. If I would have had them apply for those, because it's like a personal credit card, you use it a lot, and it lowers your score until you pay it off. And I just don't like to mix business with personal. So that's one of the negatives, maybe. I can't really think of anything else. I think they're a really good long-term partner if this is something that you're interested in, for your business. But you know, yeah, so that's kind of my review, and thanks for watching.